So the last time I did this, I asked some tricky questions to highlight how your gut reaction or your brain's so-called knee-jerk response can lead to you making the wrong decisions and coming to the wrong conclusions. And well, some of you didn't like those questions, so yep, I'm gonna do it again with these two questions. Here's the good news. I'm extremely confident that more than 80% of you will get both questions correct and 90% of you will get at least one correct. As a reminder, these are tricky questions and difficult questions, so watch yourself. Question number 1. Emily's father has 3 daughters. The first 2 are named April and May. What is the third daughter's name? While you think about that answer, it's important to put this into proper context. I'm not trying to drive you nuts, but I am trying to stretch your brain with the goal of helping you become a better investor. In fact, I have to confess, these questions are really about distracting you in order to make a bigger point about framing and framing bias, which in a nutshell says the way something is presented to you has a direct impact on how you perceive and evaluate it. More on this idea of framing in a moment. Let's answer question number 1. The answer to question number 1 is Emily. How? Well, Emily's father, emphasis is on Emily's father, has 3 kids. 2 of them are named April and May, and since it's Emily's father, we all know the third daughter is Emily. Question number 2. A farmer has 15 sheep, and all but 8 died. How many are left? We will answer this one in a moment. Right now, I want you to notice how I started off this video by framing these questions as being, quote, tricky. And with that information, your brain said, oh, I better pay attention. And automatically you focused more. And that made you engage your cognitive brain and not your X system or the brain's kind of version of a knee-jerk response. So of course you were going to do well with these questions. Essentially, I tricked you into being smarter. Let's confirm that with the answer to question number 2. The farmer has 8 sheep. He or she started with 15, but that doesn't matter. They could have started with 15,000 because more importantly, all but 8 died. Let me know in the comments if you got both questions correct. Why is this so important? Because I'm willing to bet that less than 10% of us got started in metals because we thought we could make money and get rich. Most of us started either out of some form of financial prepping or to protect our wealth. The good news is it doesn't matter how or why you got started. It's where do you go from there? In the church, we say it doesn't matter what brought you through the doors, you're here now. As I shared, in the world of behavioral finance, framing is extremely powerful, and our initial framing can also prevent us from making the most of investment opportunities. Think back to how I framed those questions. I did it in a way to make sure that I engaged your brain, specifically how you took in the information, processed it, and ultimately came up with the correct answer. In behavioral finance, we are very concerned about investors' biases, and in this case, the framing bias, because if left unchecked, your framing bias will have you make decisions based on the way the information is presented and not based on the facts themselves. In general, the way you were introduced to precious metal investing or stacking has a lot to do with how you approach it today. As such, I want to challenge you in this video to stretch your mind when it comes to precious metals investing. Just because you started down this road as a way of protecting your purchasing power or preserving your wealth or whatever it is, that doesn't mean metals shouldn't or couldn't grow your wealth, improve your standard of living, and or be wealth for your next generation. Because of my real estate background and education, I see precious metals through the lens of an investor. This is so important because as we wait for the starting gates to this new bull market to open, I truly don't believe there's a group of people better equipped to benefit from the wealth transfer that will accompany this bull market than us precious metals investors. We are steeped in this market. We can tell you what metals are used for what industries need which metals are in deficit, everything a value investor would want to know to make money from this bull market. Most of us watch videos dang near every day, and it's time that we use this specialized knowledge to help us move beyond preserving our wealth with physical metals to growing our wealth with metal-related equities. It's just a fact. You can't save your way to wealth. I want you to think about the big name people in this community that we listen to all the time. Rick Rule, Lee Organtz, Jeffrey Clark, Peter Greenidge, Mike Maloney, E.B. Tucker, and others. They all have their physical metals, but how did and do they make their money? What do they really talk about? They talk about investing in mining and royalty companies as a way to grow their wealth. That's what we need to start doing as stackers, because this is a once, maybe 2 or 3 times, if you're lucky, opportunity in your life. Meanwhile, most of the stacking community rejects this idea because most of the creators don't talk about it and it makes it seem like a taboo topic. Let me tell you a secret. They all are investing in these mining companies. They just don't talk about it because talking about it doesn't get you the clicks. It's at this point that people say, but equities and mining companies, they're so risky. I don't want to hear about risk. There's risk in everything we do. Your goal is to reduce the risk. You get yourself educated and learn how to be a better investor, and that's how you reduce your risk. There's risk in walking across the street, but we all do it every day. But if you put a blindfold on and try to walk across the street, you might end up with a very different result. So risk is something that we manage. We don't run away from. We can't avoid it. We manage it. And in this situation, the most important thing we can do is become educated so that we can learn how to invest in these things and have the opportunity for some transformational wealth creating opportunities. I suggest that you go buy a copy of Rick Rule's Silver Investors Bootcamp. It's $100. Go buy Jeffrey Christian and the CPM Group's Precious Metals yearbooks. They're like $150 or $60. Investing your skills so that your knowledge of metals can help you increase your wealth is the ultimate goal here. That is why most stackers won't get rich. There's a lot of risk with mining companies, but again, we manage that risk, and when we take it on, we make sure the rewards associated with that risk exceed it. I don't intend to live through this bull market and simply watch the spot price of gold and silver. I'm seeking opportunities to grow my wealth, just like we talk about here at Stackers University, and just like we talk about in the Stackers Wealth Pyramid. We build our financial base with sound money management and a precious metals foundation, and then we grow our wealth from there. Which brings me to the sponsored content portion of this video, and thank you to FE Battery Metals, stock ticker symbol FEMFF. FE Battery Metals is a junior resource company that has quietly amassed some serious real estate in Canada between some of the biggest players in the industry. As we all know, the best place to find something is where it's been found before. As an explorer, they are looking for metals like lithium, cobalt, zinc, gold, and silver. I know it sounds a little weird to be discussing lithium on a stacking channel, but like I said, I don't intend to sit by and let this bull market pass me by without taking my shots. And as I see it, there is no way we can usher in this green movement and this EV car revolution without two main metals, copper and lithium. I'm not sure how many of you participated, but 2 weeks ago, Rick Rule held his Battery Metals Bootcamp. And let me tell you, that completely opened my eyes and my mind, as the case for battery metals is extremely compelling. If you haven't seen it, go buy that bootcamp. I've read and heard about FE Battery Metals a little bit before, so when they approached me, I was willing to listen, and one of the first things they shared with me after their very encouraging drilling results was their recent discovery of silver and how much more significant that discovery was than expected. This is very exciting, as one of the many byproducts of them drilling for lithium will be silver. And if we believe that silver is going to do the things it's going to do, that's going to add tremendous value to this company. We all know the importance of lithium-ion batteries as it relates to EVs, but I didn't understand how much it was in deficit. Take a look at these charts. Just as copper is critical for the electrification of the world, lithium is just as critical when it comes to developing electric vehicles. After decades of underinvestment in North American-based lithium mining, we are now scrambling to find the metals we need, and the high demand with low supply absolutely means higher prices. The International Energy Agency, IEA, projects that global lithium demand will accelerate by more than 40 times by 2040. And let's not talk about the EU banning the sale of combustible engines by 2035, which is also the same year President Joe Biden has had in sight. It's almost like policymakers are making this decision to go with the electrification and this green movement with no regard for where the metals come from and what's needed to actually get these metals. Now that I mentioned crazy government decisions, let me tell you what made FE Battery Metals jump to the top of my list of lithium explorers. Just a few weeks ago, the Chilean government announced that they will nationalize the country's lithium industry to boost the economy and protect its biodiversity. We all know the importance of jurisdiction, and being in Canada and one of the most favorable and pro-mining areas of Quebec is a major bonus for FE Battery Metals. So I don't have to worry, at least as much, about the government coming in and ruining a good thing with FE Battery Metals. Reminder, Chile is the second largest producer of lithium, so that's going to have another tremendous impact on the industry. I also really like that they have spent hundreds of millions of dollars setting up their operations, and it's amazing to think about this little company that's around $10 million. They are one of the largest landholders surrounded by billion-dollar lithium giants, as you can see by this map. With over 8,000 meters of drilling completed, there's potential for a number of things. 1, for them to continue drilling. 2, to continue to hit encouraging results. 3, to create shareholder value through a potential buyout or merger. One of the last points I want to make and this one actually really intrigues me, is how automotive companies have quietly started buying part ownership in some of these mining companies in order to secure their product. In February, we saw big automaker Stellantis invest in a copper miner in Argentina. GM has invested $650 million in a lithium company, and we see more and more articles and companies beginning to explore investing in lithium mines as a way to protect themselves going forward. Obviously, I can't give you financial advice, and I'm not certified or qualified, but there is no question in my mind that lithium is a critical metal in this EV movement. It's a metal that will quickly be in deficit, has an almost guaranteed demand that will only increase as automakers race to meet their 2035 deadlines. And automakers are now going to the source in order to make sure they can secure their product. And if you ask me my off-the-record comment, the chances of FE battery metals being bought out are very likely in my mind if these results continue to be positive. There is no way these big boys are going to let FE battery metals grow into a monster that will challenge them. Of course, this is pure speculation, and at about 40 cents a share, it's definitely a speculative investment. So please don't make your decisions based on this video. You need to do your due diligence. I don't want to hear about you using your kids' college funds because you saw this video. As we always say, you have to own your own results. Let me know in the comments what you think about using metals, specifically equity-related metals, to grow your wealth. If you don't own any mining stocks, what's preventing you? Or you can simply put an A+ in the grade book so that everyone knows that at Stackers University, we always stack smarter and never stop learning.